So every day, every Thursday, we tend to do a piece on zero DTs. And today is no different. We're following up what Liz and Jenny did yesterday on the fundamentals of selling zero DT premium in the SPX. And so let's get right into it.
I'm ready.
From our research team. The fundamentals of kind of getting into the little bit of the nitty gritty today of zero DT. So zero DT option contracts that expire on the same day. The deal with zero DTs is just the instant bang for your buck. If you're a premium seller, rapid decay. If you're a premium buyer, things move fast.
Sure.
There's very little edge either way. I mean, that's the whole thing. You're not giving up much to buy stuff. You're not giving up much to sell stuff. It's very efficiently priced. Everything moves fast. And I mean, all I'm going to say is if you think the counterparty has an edge, I can't figure it out. Maybe on scale, but that's about it.
Sure.
And the zero DT markets, just so you know, there has been a surge in popularity over the last couple of years. Retail investors tend to love it. They make up, last statistic I saw was retail investors made up over 70% of the zero DTE marketplace. So that's cool. Let's go to the next slide. Okay. So they wanted to get into the nitty gritty here. So they decided to show you actually how they come up with the capital requirements if you're trading SPX, XSP, or SPY, right? This does not apply to ES or MES. Those are different, and those require span margin, which is a lot less than this. SPU's down on the day, Tony. It's a credit. It's
as foretold, Sadnoff. You got this one right. See what a difference about 3 minutes makes?
This is pretty much crash mode. They're only up $1.
That's right.
Anyway, according to FINRA, the buying power that a broker must reserve in your account. This is not something that's optional. This is the minimum requirements for everybody. And it's the larger of a loss from a 20% move in the underlying or a loss from a break 10% past the strike. The larger of. That's how we code everything. Because this does not account for how unlikely a 20% move in the underlying is over the course of a single day, selling zero DT options almost always requires buying wings, any kind of long option, just to reduce the capital requirement. The reason for that is if you're trading like in the SPX, the underlying is $6,000, which means for one contract, you'd have to put up $120-something thousand for a naked one lot. If you buy the wings, then it's just the wing width.
Right. It's just $30 wide. It's the credit received minus the $30, significantly less expensive and it makes it open to everyone.
So if you want to look at the worst 5% of all cases, you just look on the chart on the right there. And if you go $10 wide on the width, it's about $220, $228. If you go $20 wide, it's $7. Like, we're just putting the numbers out there for you. So if you want to do a synthetic strangle, it's about $3,900 in total risk for a one lot. And if you want to go reduce your risk significantly, this is worst case, $228 on $10 wide. If that doesn't mean that every time you lose $228 or $3,900. It just means that is the worst 5% of all cases. So if you did this 20 times, one time it would be in there. Maybe one time. We don't know. Let's go next slide. So here we look at just, the selecting the short strikes. So at Tasty, we choose short strike based on their delta and how the option value changes with a $1 move in the underlying. Balancing a put and call delta creates delta neutral positions. What Tony and I do is a little bit different. What we look for is the expected move in the daily, the daily expected move. So let's say the daily expected move for the rest of the day today. What is it? $20, $15 right now? It's probably low. What is it in the SPX?
I'm taking a look at this moment.
Yeah.
So SPX for the rest of the day has an expected move of about $16.50.
Okay, that's what my guess was, 15 to 20.
Yeah.
$16.50. So if Tony and I were going to do an iron condor right now, based on the expected move for the rest of the day, we would go out $20 away from the at the money.
Right.
And then we would decide how far we want to buy our long wings. They'd probably be another 20.
Yep.
So just to give you a perfect example here, if the SPX is currently trading for 64.50 on the nose, we would sell the 64.70 and the 64.30. We don't skew those too much. And then we would buy the 64.90 and the 64.10. And that's where we would be. If that's kind of our default. It's a little different the way they wrote it up here because they're using an iron fly, but it's all the same stuff. And we decided over here to show you short strikes on an iron fly, and you can see what the win rates are depending on how wide you want to go. And we like that 20 delta, and we like that 91%. You make less money, but you have the higher win rate. Trading's always about the higher win rate for us. Always, always, always the higher win rate.
That's for sure.
Yeah, we're all about the higher win rate. We don't care about anything else.
Mm-hmm.
So the next thing is entering and exiting the trade. So the 0DTE markets offer liquid entry and exits. There's no question about that. Whether you're trading ES, SPY, or SPX, all those markets are crazy liquid. Everything's basically one tick wide. The profit targets are probably the most interesting part of trading. And there's a lot of information here. You can read through it. But the cornerstone of Tasty mechanics is capturing profits by closing winners. When we built Tasty, the fundamental premise behind everything we've researched and done over the years is teach people to win. Teach people that a high probability of winning means you're going to take more risk. You're going to risk more to make less, but we want to give people lots of wins because winning breeds winning. That's
managing winners instead of managing losers, right? Put yourself in a winning.
I hate the industry that manages losers. I like the industries that manage winners.
Right.
So when we trade 0DTs, I mean, I don't know if 10% of max profit is a 91% win rate and 25% of max profit is an 84% win rate, then anywhere between 10 and 25% is where we're going.
Right.
Because that's somewhere in the high 87, 88, 85, 91, whatever it is. The no management at 50-50 with a losing overall average P&L makes no sense at all. So this is not a trade that just set it and forget it.
Right.
Statistics could not be more clear. If you set it and forget it, you're going to win 50% of the time, lose 50% of the time, and your net P&L is going to be down. If you manage early, you are going to win.
Very good.
That's just the nature of this.
Try to get them to do
product. I mean, amazingly, we don't hear anybody else talk about it this way, but I mean, I guess.
It sounds so simple. You know what I mean? It really does.
Yep. It's crazy.
Mm-hmm.
Let's go next slide. So with some of the takeaways, because I skipped over some of the text because it's just a lot of words, but you can go back and read this and do whatever you want. But the takeaways have been very consistent for us, regardless of the piece of research that we do. In the most popular underlying 0DT selling, option selling is some ways even more straightforward than longer dated trades, just because of the instant gratification, all that. Decide how much risk you want to take and use that to determine the appropriate wing width. Like I said, we are somewhere in that $20 wing width range. That seems to work best for us. And we are somewhere in that 10 to 25% profit target range. Typically, we are somewhere around delta neutral because we have come to realize we really don't know what's going to happen in the next half hour.
But you might, meaning you, the audience might, and you could certainly skew it one way or the other. I mean, that's completely up to you.
I can promise you when we do 0DT trades tomorrow in the live trading session, they will be essentially neutral. And then if we have to make an adjustment, we will, because we're not doing them on the opening. So it gets a little bit harder when you do them later in the day. And the liquidity of 0DT markets means that you can typically get in and out whenever you like. So far, we've had the most success by closing winners rapidly and being patient, a little more patient with losers or making adjustments. The real key is to stay attentive and active. This is not a passive trade at all.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.